Hi, everyone. Thanks for joining Jeff and I today on our webcast. Today, we're going to get into a little bit of real estate versus, I guess, stocks. As we know, real estate has been tumultuous in the last couple of years, to say the least. Currently in the GTA, real estate has dipped below a 1 million mark, which is the first time in 5 years. So it's declined considerably. And the average price right now for real estate in Toronto area is what, 973,000? So that's like a 27% price decline since the real estate market peak back in what, February 2022?
As soon as they started raising rates.
Hmm. So is it a good time to be buying like a secondary property, a first property, or not?
Well, I wouldn't buy a second property at any time for reasons we'll talk about. It's not unusual to hear people say that their home has been their best investment. Usually, when you hear that, you know they don't have a portfolio of stocks because over time, the S&P 500 usually goes up around 7% a year if you look at a long horizon. And if
Mm.
you are able to get 7%, you'll double your money every decade. Home prices don't go up by that rate. And for properties that do, you have to consider the costs that are involved to owning real estate. It's something a lot of people ignore.
Yeah, so there's quite a few different costs that come with purchasing a home that people don't take into consideration when they're calculating out the profit, right? The net value. So things like insurance costs or land transfer fees, or there's oodles maintenance on the house over the years, or what else? There's a whole bunch of them. Real estate agent fees,
Yeah, that's a big one.
insurance costs.
Yeah. Did you mention
All
property
kinds.
taxes?
And property taxes.
Yeah.
Yeah.
If you live in Toronto, our property taxes have gone up 21% compounded over the last 3 years.
Hmm.
So those are real costs to owning property. So I mean, you have to live somewhere. So you have your primary residence. This blog is for someone who wants to buy a second property because
Yeah.
anytime we write about real estate, we get more clicks and emails than anything else. I don't want to get into debates with people about whether they should rent or own their home. I'm talking about a second property. And I don't think you should do it because, first of all, those costs we mentioned. If you like real estate so much, you can still buy publicly traded real estate stocks, and there's lots of them out there. Well, we have two of them that we own. And the great benefit is that if we change our mind, we can just hit sell. I don't have
Yeah.
to pay any legal fees. I don't have to go to the bank. I don't have to stage anything. I don't get phone calls at 2 o'clock in the morning over a leaky pipe.
Contact the lawyer, nothing. Yeah.
Lawyers are the worst. I have no appetite for that. But there's two of them that reported last week, which we have owned since 2024. CT REIT, their anchor tenant is Canadian Tire. Good numbers. They grew their net operating income in the mid single digits. Occupancy is almost 99%. That allowed them to raise their distribution in April. And since we started buying the stock for clients in 2024, we're up about 35% since then, since our first purchase. The second company reported the same day, Dream Industrial REIT.
Mm.
Good numbers too. Low single digit growth, 96% occupancy. And we're not up quite as much on Dream, but we're up about 15% total since we started buying that one in 2024. But I'll take those numbers over
Mm.
what was the price decline you cited? 27%?
27%.
Yeah, so I'll go with the REITs. And if we lose faith in them, I can just sell them the
Yeah.
same day.
Very liquid.
Yeah, the liquidity is the big advantage. And the only
Mm.
costs to owning those are the transaction fee to purchase the stock. So, $15 a trade. And then when you sell it, if it's in a non-registered account, we've got to pay the capital gains tax. But that
Mhm.
goes with any asset.
Right.
So I like the
Yeah,
liquidity much better.
it's a good alternative.
Yep.
Okay. I think
All
that's
right.
everything.
Yeah.
Talk to you
Okay.
later.
Yep.
Okay.
Thanks.
Bye, Jeff.